Hello, everybody. Thank you very much for joining me again. It's now 5:30 p.m. in Istanbul, Turkey, February the 4th, Friday, and we're going to take a look at Bitcoin to see how it's trending. And we're going to do a technical analysis using moving averages today. It's really important to follow Bitcoin's movement. I always have Bitcoin on my top monitor over here. It's always on because it gives me an idea of how other coins are possibly going to trend as well. Many coins are positively correlated to Bitcoin during really large movements, and it's always a matter of time until coins do move with Bitcoin. No coin is immune to the way Bitcoin moves. Every coin during a very large drop is likely to follow Bitcoin eventually. Sometimes they don't necessarily drop that particular moment with Bitcoin, but eventually they do. So moving averages are one of my favorite ways to gauge the overall trend of a market. If we're taking a look at moving averages, they give us a compilation of an average price taken over a specific set of data. And there are different numbers. For example, I personally use, you can see 5 different ones here. I use the Fibonacci numbers, 8 from highest to lowest, 8, 13, as in the highest line, 8, 13, 21, 55, and 200. Here it's 200, 55, 21, 13, and 8. Depending on which one they're staying above, that will determine the bullishness of a coin. For example, if it's well above the 8 moving average, that would be considered extremely bullish for that particular moment. If it's staying above the 200 moving average over a long period of time, then that would be considered a very large bullish trend over time, and over a greater and larger degree period. So just as an example, the very first bull run started right here. Okay, this is called a golden crossover. A golden crossover happens when the 200 moving average crosses below the 55 moving average. See how it crosses over right here? Now, it's not always advised to enter right here, because if you entered when they cross over, these are known as lagging indicators. Lagging indicators is something that needs a specific set of data to compile what you see here. So it takes an average. Because it takes an average, it's a lagging indicator because it's using past data to formulate the number that you're seeing now. So 8 is the quickest one that you would get because it's only over 8 bars. 200 would take 200 bars. For example, here, right, this would end up taking, I'm just trying to click here. This would take, see how it says the bars here? Well, this would take 200 bars right over here, just as an example, okay? So right there, 200 bars, okay? That's how this 200 moving average is computing that particular price point right there. The yellow one is the 55. So when we have a golden crossover, which is known as when the 200 moving average crosses below the 55, which means that now the 200 moving average is supporting everything above that you see. And the order from lowest to highest here, from the bottom to the top, is going to be 200, which is the biggest number that I have, then 55, then 21, then 13, then 8. If you have the biggest one supporting on the bottom first, where it crosses over, that's considered a golden crossover. And that's considered an extremely bullish crossover where momentum is now gauging towards the bulls. And the bias is definitely set towards the bulls, where a gigantic rally could happen. It doesn't always mean to enter exactly when it crosses over. In my new course that I have, I talk about the exact moving average strategy that I have to enter, which has a lot to do with finding supports at particular price points. If you guys are interested in it, let me know. I only have 60 courses left of 100. That's it. Only 100 courses will ever be available. It comes with my 250-page textbook, which is pretty cool because it has all the golden rules in it, and it has the 28-hour course as well. It goes for $1,750. Might seem like a lot, but keep in mind that I'm $1 million trader. Last year I was trading in the $1.5 million ranges for months, and you're going to be learning from one of the best technical analysts and traders as well in the market, I would say. I'm sure there's tons of people out there. I just happen to be very transparent, and I have a great way of teaching and a style that people can easily relate to. So definitely consider picking it up. Don't be one of those people, guys, that's going to try to figure this out on your own, only to get liquidated again because you were too stubborn to actually invest in yourself first. This is not throwing money away. This is actually an investment in yourself. I show my big 6 strategies, which is huge. Very hesitant to actually share it, but I am sharing it with you guys. Shows exactly how I enter trades and the specific criteria that I look for, on top of sharing my golden rules of cutting losses as well. Let's get back to BTC. So right here is where the crossover happened. Entering prematurely is never good, because sometimes it looks like it's going to cross over, but it never does. So entering in the next bar is always advised, but not always as well, because sometimes it's too late. So assuming that we entered Bitcoin here, just assuming, okay, that we entered right there, we had a pretty substantial stop loss where we would be riding this, because there that dropped 9%. But investors, they tolerate, they're going to buy at a specific price point and just hold this thing for a long time. Investors are not concerned about 10% moves. They're going to hold it for a long time. So you entered at 330. Then now you're actually going to sell it. You're going to sell it when it crosses over again. So the strategy here involves riding it until you have confirmed the crossover, which would be right about here. So you would have been able to take a $300 profit and rode it to about 6,600. Okay, that's where you most likely could have rode it till, but you could have anticipated. You could have anticipated honestly that it's coming down, in my opinion. So this stop loss, it guarantees that you're gonna ride it to the maximum amount, and you're not gonna take a profit until a guaranteed trend change happens. The gap that you see as it widens, it's going to be considered more bullish. The bigger the gap, the more bullish it is between the 200 and the 100. Okay? Think of this like an elastic band. The further that it gets away from any of these elastic bands, this one or this one, the more likely it is going to eventually snap back hard to this range. And of course, it always wants to snap back to this range, okay? That's why you're seeing it get closer and closer and tighter and tighter, tighter and tighter, tighter and tighter, until a massive drop happens. So yeah, you can argue that you could have taken your profit at 20K, but then again, you wouldn't have needed to if it kept going and going and going and going. Of course, there's a lot of other factors to consider. In my course, I talk about combining. The new course is awesome because it's combining 6 years of work. My old courses are outdated now, to be honest, and they're still great, but they're nothing compared to the newer one, because the old courses I was only trading like $20, $30, $40,000. In my newer courses, I'm trading $250,000 to 1.5 million. So it's kind of a difference of night and day in terms of skill now, and I've unveiled a lot of new strategies. For example, how you could have caught the top here, combining it with EMA, etc. Anyways, enough about that. So I just want to give you guys a quick background with how EMAs are. The more that it fans, let's take a look at here. Let's look at this one now, like the most current bull run. Okay? The most current bull run, you kind of see it. It's hard to see what's going on here, right? Because it's going back and forth a lot, crossing up and down. But I talk a lot about how you take stop losses here and how you use different time frames as trigger charts to enter. But let's just say you entered around here, right? On the official breakout, like, which would have been right around there, like up breaking above here when it crosses over on the daily, right? You would have entered around 10K, and you would have taken your profit like around, not there, but you would have taken it probably around here when it's confirming more of a bearish run. But you would have definitely looked at different time frames to confirm that this drop was going to happen, right? So this strategy is somewhat flawed to only use this as entries and exits, right? But realistically, if you use only this strategy, you could have exited right when it crossed over. And that would have been around 30,000. So you would have made a 300% profit there still, which is a really nice profit. Okay, so if we take a look at Bitcoin, the way it's trending now, on the daily, what are we seeing? We're seeing that it's bearish still on a high time frame, right? It's death crossed. Okay. If we take a look at the 12-hour, it's death crossed. If we take a look at the 3-hour or the 1-hour, we see that it's right around the region. Whenever the yellow and the white meets, it wants to do something. It usually wants to do something. Doesn't like to stay met up for a long time. Look, right here, see this? Every time the yellow and the white, which is the 55 and 200, meet up, it wants to do something, always. Okay, it doesn't usually stay there. It gets to this elastic band, and the elastic band uses it like a launch pad to shoot it up or down. So whenever we get to these price points, you can expect some sort of reaction. Right now, we can say that we can expect a reaction on the 1-hour time frame, almost the 2-hour time frame, because it's getting close. Think of them as a resistance and a support. Okay, this here is the resistance, right? And then this here is the support. Right now, just the way it is. So where it's sandwiching in the middle, of course it could be reversed sometimes. The white could end up supporting, right? Here, to give you an example of how the white's supporting now, right? This one we never got to the middle. Let's see if we can get one to the middle. Hard to find examples of a bearish run right now, but this one's probably the best I can give for now. Okay, so on the 1-hour, we're seeing it, or was it the 2-hour? Yes, the 2-hour, it's sandwiching in between. Whenever it sandwiches in between there, where the white acts as a resistance and the yellow as a support, something ends up happening. It's going to most likely propel one way or the other. We're finding that on the 2-hour, the 200 moving average is acting as a resistance, right? And also the 2-hour, the 55 is acting as a support. On the 1-hour, they're really fighting each other, looking to make a move of some sort. If we take a look at the RSI for the daily, it's definitely going to the upside, but I'm very cautious still right now. I'm unsure of how this trend is going to be. I'm not sure if this actually broke to the upside or anything quite yet. It's difficult to tell. I like to draw my EMAs. I talk about how you're supposed to properly draw EMAs and how you're supposed to properly draw bull traps. This is a proper way to do it. Do you see how nice it is right now? Okay. This is the perfect way to have drawn it. So we're reaching a support right now, or resistance, as you can tell. Right now, see that? So we have a chance to either break up or completely drop to the downside, and it's very impossible to predict. The best traders that I know, they react. They don't simply predict which way it's going to go. Once that break happens one way or the other, that's where they're going to enter a position. If this breaks up, then you go long, but you don't go long ahead of time, because that's just entering prematurely without any bias or without any confluent reasons. It's going to go up. If it goes down, short it, right? So it requires a lot of attention if you're day trading. Right now, there's no way in knowing which way it's going to go. Anybody that predicts it, they're just guessing. The best traders I know are are reactive, not predictive. Okay? So my advice is just to take your time right now. There's no direction that this is heading to, right? But if I had to guess, okay, if I had to force myself to make a guess, I'm going to have to guess to the upside, because I think it's going to correct this entire figure. Probably correct that entire figure right there. Okay? That's what I think it's going to do, most likely. At least that wave. It's probably going to get to 40,000 and break out, in my opinion. 40,000 would be a very reasonable number. Or the 55 EMA on the daily. Somewhere between 40,000 and 42, if I had to guess, and I was forced to. Because the 2-day MACD just crossed over, and that's a pretty powerful indication of a coin going to the upside. So my bias stands neutral bullish, okay? Neutral to bullish if I had to force myself to pick something. So anyways, I just wanted to leave you guys off with that, with a quick Bitcoin technical analysis video. to let you know I'm fairly neutral to bullish. If something does break out, great. We're gonna get an opportunity to long something. I would love to long it all. I haven't taken a trade since yesterday afternoon because there's nothing worth my time right now. A lot of these coins are too low volume for me. When you're trading $250,000 on a $50 million 24-hour traded coin on Binance, your slippage is just ridiculous. Closing positions and entering positions, it's just a nightmare. I don't even want to get into it. It's not worth my time to be entering it, to be honest. Despite we getting some good rallies, like 16% on QTUM, shit volume though. And then 23% on ONT, which are hot picks today. Anyways, I'll keep you up to date. Have yourselves a great weekend. Take care. Bye now.